The CEO of a Bitcoin company is out just like that. This isn't just any company. It is backed by a former UK Chancellor, and its newest major investor is probably one of Britain's most recognizable political figure. This firm was on the verge of total collapse, and now they're betting the farm on a radical new plan. So what does this corporate earthquake really mean? So we're going to break down the news, dig into companies' hidden history of near failure, and explain their new dual engine strategy and cover the three biggest takeaways from this leadership shakeup. Alright, let's get right into it. On April 15, 2026, Stack BTC announced that its founder and CEO Jay Patel was stepping down immediately. He's being replaced by David Gallant, the founder of a precious metal firm who has a lot of experience in merger and acquisitions. The company is spinning this as a move to strengthen the team for its new chapter. But the timing and the abruptness of it all is definitely raising some eyebrows to investors and, watchers of financial news. To get why Patel is out, you have to understand just how close this company came to vanishing completely. Before it was Stack BTC, it was a firm called Cathay Digital Assets, which Patel founded back in 2021. The idea was to invest in a wide range of crypto assets, but it got absolutely hammered down by the market downturn and, the FTX collapse. The company wouldn't raise any more money and was essentially liquidated. It started with over $6 million in capital, but only managed to give back about $3.4 million back to its shareholders, a huge loss. The business was a failure, but instead of just disappearing, it was brought back to life with a new name, a new strategy, and some very powerful new friends. And that brings us to the new Stack BTC and its dual engine strategy. This isn't just another company buying up Bitcoin. Well, think of it as a hybrid car, or they say they are a hybrid car. The first engine is simple. Use company money to buy and hold Bitcoin as its main assets. The second engine is businesses. Stack BTC plan to go out and acquire profitable real-world businesses in the UK. The cash flow from these businesses will then be used to constantly buy more Bitcoin, all without having to issue new stocks and dilute their shareholders. It's actually a bold plan to create a self-funding Bitcoin machine. That said though, their current holdings are actually pretty small, and the company has admitted to some recent paper losses on its Bitcoin. So what are we going to make of all this? I see it breaking down into three key parts. Okay? So first, there is the politics. Let's be clear. This is as much as a political story as it is a crypto one. The company's executive chairman is Kwasi Kwarteng, the UK's former Chancellor of Exchequer, an infamous figure under the infamous Liz Truss cabinet, if you know about UK's government history. On top of that, a major new investor with a 6.3% stake is the leader of Reform UK Party, Nigel Farage, who dropped a £215,000. Farage is a huge Bitcoin supporter who wants to make the UK a global crypto hub. This is already stirring up controversy, with political opponents calling for an inquiry into a promotional video with Farage that dropped right before the CEO's exit was announced. Second, what does this mean for the company itself? Well, the official story is that they're bringing in an M&A pro David Gallant to make the new strategy happen. And probably that makes sense. But seeing the founder Patel leave so suddenly, right after the relaunch and right at the political heat that was turning up, feels like less of a clean transition and more like a sign of serious turbulence inside the company. Finally, what about investors? Well, this is the definition of a high-risk, high-reward situation. On one hand, having people like Farage and Kwarteng involved plus a partnership with blockchain.com could mean powerful political connection and credibility. Farage investment alone made the stock pop. But on the other hand, this is a company with a proven track record of failure, and its stock has been crushed over the past year. Patel's exit just adds another layer of risk you can't probably ignore. So where could stacked Bitcoin go from here? You can look at it in two ways. The bull case, this is a genius move. The new leadership start buying up great cash flowing businesses. The political connection paved the way for friendly regulation in the UK, and the Bitcoin treasury grows and grows, turning stacked Bitcoin into a British version of MicroStrategy, or nowadays Strategy B. The bear case, this is a desperate Hail Mary. The political hype turns out to be just for show. The acquisition strategy sputters and fails, the company burns through its cash, and the whole thing collapses under the weight of its own chaotic history, becoming just another crypto ghost story and probably crypto failure as well. In the end, stacked Bitcoin has more from a failed crypto fund into a high-stake gamble, supercharged by political power and probably also controversy. The founder is out and the new team is in, with the monumental task of making this vision a reality. So, what do you think? Is this the most brilliant pivot in crypto's history? Or is it the last gasp of a dying company? Drop your thoughts in the comments below. And if you like this content, you might want to check out how a DeFi protocol is hacked using psychology here. So guys, stay safe, stay curious, and I'll see you guys next time.